We are looking at a live, ticking chart for Snap Inc., ticker symbol SNAP. And right now, as we speak, the price is sitting at $7.62. $7.62. The market is open, the numbers are flashing, and we are seeing a decline of roughly 0.85% on the session so far. Now, pause for a second. Look at that number, 762. If you have been following the tech sector, or if you have shares sitting in your individual brokerage account, that number should trigger a very specific reaction. The expectation, what the broader market narrative has been feeding us for months, is that Snap is a dead money asset, a social media relic that lost the war to TikTok and Instagram. The expectation is that this stock is simply drifting into irrelevance. But the reality, the gritty, uncomfortable reality that we are watching play out on the level 2 quotes right now is significantly more complex and, frankly, more dangerous for shorts than they might realize. We are not just watching a stock slide less than 1%. We are watching a massive test of liquidity at a critical support level. When a stock like Snap hovers in this $7 range, it is not just cheap. It is in a pressure cooker. We are seeing a battle between deep value institutional accumulation and retail capitulation. While the headline says down 0.8%, the order flow is telling a story of absorption. Someone is buying these dips, even as the sentiment remains incredibly bearish. Let's dig into what is actually moving this price right this second. You might be checking this on your Fidelity mobile app or glancing at your Robinhood stock trading dashboard, seeing the red arrow and thinking, here we go again. But you have to look closer at the volume. The volume today is showing us that the sellers are getting exhausted. When you compare this price action to the titans, look at Tesla stock or Nvidia stock today. Those names are trading on momentum and AI hype. Snap is trading on pure survival mechanics. The divergence is stark. While the rest of the market is chasing all-time highs, Snap is quietly building a base that could arguably be the most coiled spring in the communication services sector. Or it could be a trapdoor waiting to open. This is where the tension lies. You expect a tech stock in 2025 to be rallying on AI news. Snap has AI. They have the My AI bot, they have augmented reality that rivals Apple, yet the stock is treated like a brick. Why? Because the market hates uncertainty more than it hates bad news. The reality is that Snap is currently priced as if it will never grow again. Yet their user numbers, daily active users, are hitting records. That disconnect is where the opportunity and the risk live. If you are using Fidelity Intelligent Portfolios or managing your own funds via SoFi Investing, you know that allocation is everything. Right now, allocating to Snap feels like catching a falling knife. But let's look at the sector momentum. We are seeing a rotation out of the hyper-growth trillion-dollar caps and a search for yield and value in the mid-caps. Snap falls into this weird purgatory where it's too big to be a small cap and too beaten down to be a blue chip. I want you to really focus on the intraday movement we're seeing right now. It touched a low of 757 earlier. That 750 level is psychological concrete. If that breaks, we could see a flush. But it bounced. That bounce at 757 tells me there are limit buy orders stacked up from algorithms and high-frequency traders who see value here. This isn't just retail investors on Robinhood cash management accounts throwing lunch money at a meme. This is calculated structure. Let's broaden the scope. When you talk about online investing, or you look at the best investing sites, the advice is almost always buy quality, buy leaders. Apple stock is a leader. Microsoft is a leader. Snap is the underdog that refuses to die. And in the stock market, the underdog trade is the hardest one to time. The narrative on Wall Street, from the desks at Goldman to the analysts you see on TV, is that Snap's advertising model is broken. They say Apple's privacy changes destroyed their ability to track users. They say advertisers prefer Google and Meta. That is the expectation. Here's the contrarian take, the reality that might explain why the stock is refusing to crash below $7 despite the pressure. Snap is no longer just a social media company. It is slowly, painfully morphing into an augmented reality hardware and software platform. But the market has not priced that in yet. The market is pricing it as a failed version of Facebook. If that narrative shifts, if for 1 second the market starts valuing Snap as a hardware-software play, similar to how they viewed the early days of a Unity or a Roblox, this $7 price tag becomes laughable. However, we can't ignore the macro pressures. We have interest rates that are still relatively high, making debt expensive. Snap is not printing cash like Nvidia. They have a balance sheet that needs to be managed carefully. When you're doing your self-investing research, perhaps looking at Fidelity ETFs or considering where to put your capital in a Fidelity brokerage account, you have to look at free cash flow. Snap's cash flow has been the sticking point. They burn money to innovate. In a zero-interest rate world, investors love that. In today's world, investors punish it. That is why we are down today. The market is demanding profitability now, and Snap is still asking for patience. I want to pause here and ask you a question because this is crucial for gauging sentiment. Comment below how many shares of Snap you currently hold, and more importantly, what is your average cost basis? Are you holding bags from the $20 range, or are you accumulating down here in the sevens? I want to see where the pain points are in the comment section. Let's get back to the chart. We're heading into the lunch hour in New York. The volume usually tapers off here. The price is holding steady around 762. It hasn't collapsed. That's a minor victory. In a market where winners keep winning and losers keep losing, stabilization is the first step to a reversal. If you use Fidelity IRAs for your long-term holding, you have to ask yourself, do I want to own this for 10 years? In 10 years, will we still be using smartphones or will we be using AR wearables? If you believe the latter, Snap is one of the few pure plays you can buy. Apple is an ecosystem play. Meta is a mixed bag. Snap is the pure focused bet on AR communication. The expectation is that Snap gets acquired, maybe by Microsoft, maybe by Amazon. That rumor pops up every few months. It puts a floor under the stock, but you can't invest based on a buyout rumor. You have to invest based on the business fundamentals. And the fundamentals right now are improving but fragile. So, where do we stand? The stock is red today. The sentiment is bearish. The charts look heavy. That's the bad news. The good news is that usually when the sky looks darkest, the bottom is close. We're seeing capitulation from the retail crowd who bought at $12 and are tired of waiting. When the last frustrated seller clicks sell on their Robinhood app, the bottom is in. To wrap this up, let's look forward. The next few weeks are critical. We need to see Snap hold the 750 line. If it holds, we build. If it breaks, we flush to 690. The reality of Snap Inc. is that it's a battleground stock. It's not for the faint of heart. It's for the investor who sees the value of 400 million active users and believes that eventually Wall Street will figure out how to price them correctly. Expectations were low coming into today. Reality met those low expectations with a slight decline. But the lack of a collapse is the signal I'm watching. The market is waiting for a catalyst. Until then, we watch the levels. 762. 750 support, $8 resistance. That's your playing field. Stay sharp, watch the volume, and do not let the red numbers scare you out of a thesis if you have done your homework. This is Snap. It's volatile, it's frustrating, but it's never boring. One final thing. If you are trading this, keep your stops tight. If you are investing, check your thesis. Does the story of AR adoption still hold water? If yes, this price action is noise. If no, then what are you doing here? If you found value in this analysis, make sure to hit that like button and subscribe to the channel with notifications turned on so you never miss a market update. And don't forget to drop your comment below on where you stand with Snap. Disclaimer: I am not a